This is Robert Harper with Virginia Farm Bureau's Grain Division on Friday, December the 4th, 2020. Glad to bring you the Merchandiser Minute. Let's start off by looking at what the futures markets did in Chicago this week. March corn was down 13 cents for the week at $4.20 a bushel. January soybeans were down 28 cents a bushel for the week's trade to close at $11.63 a bushel. Your new crop wheat contract, July 21 wheat, was down 27 cents a bushel for the week to close at $5.79. We had a lot of influence as usual on the market this week. One of the things we saw coming out of the gate Sunday night when the board opened at 8 p.m. was weather forecasted, wet weather I should say, forecasted for much of Argentina's crop region and much of Brazil's crop region. We know that Monday was the last day of the month, and we saw a pretty sizable sell-off as the funds took profits out, consolidated on Monday, and that was also exaggerated by those rains in South America. When we got into Tuesday, we were hoping for a turnaround Tuesday. Remember back before 2015 when people traded futures contracts in Chicago, a lot of the traders would call Tuesday turnaround Tuesday. It would always do, or in many cases I should say, do opposite of what happened on Monday, and that's what we were hoping for Tuesday. But again, we saw funds wanting to consolidate and pull profits, and that continued through Wednesday as well. It was nice to see some stabilization Thursday with a rebound in corn and beans, and then we did close out the week slightly down this today. But you heard those totals, and it looked like just a week where the market, the futures market, is looking for a new story. We've had this bull story for a long time. We saw the just amazing demand for the commodities that you all grow in September and October. We saw that demand continue through November, just not at the highest level. We also had weather working in the favor of higher price during the months of September and October and November as dryness continued in South America as well as in Russia and in the Black Sea region. So those stories have been around for a long time, and it just seemed like this week there was a pause button as we went from the calendar of November to December, and we're really going to, as usual, anticipate next week what those influences might be that could move the market higher. If we step back for a minute and talk about basis, we know there's been some volatility, some change in local basis for your beans that you're moving and some corn that you're moving. Please call in and we can discuss those at all the different destinations we ship to in Pennsylvania, Maryland, Virginia, and North Carolina for you, the member, but still we have the best soybean basis that you all teach me you've ever had. It's certainly the highest soybean basis for right now through January in my short career here at Farm Bureau. And we also have some really good and improving corn basis numbers, whether it's for old crop or next year's new crop. So keep that in mind. There are opportunities out there. One of the things that was going on this week, we did see a big flash sales announcement on Monday for corn, but we did not see those flash sales announcements for soybeans this week. Yesterday, when beans were up 15 cents a bushel, there were a lot of rumors in the trade that China had made another bean purchase. So we're going to be looking maybe before next Thursday, maybe seeing that pop up Monday in the flash sale system. When we think about the USDA numbers this week, inspections, our top destinations for corn was China and Mexico. Our top destinations for beans this week, China and Thailand. Our top destinations for wheat, the Philippines and Mexico. And then when we got to Thursday and we saw the sales report for corn, wheat, and beans, the export numbers came in exactly as expected. So no fireworks on either way. They came in as expected this week. Our largest purchaser of corn was Mexico. Our largest purchaser of beans in the last week was China. And our largest purchaser of wheat this past week was Mexico. We saw the government tell us that Virginia beans coming into the week were 85% harvested, and Virginia's wheat crop was basically planted at 94% harvested. I wonder how that shakes out in your local area. We just did get the Commitment of Traders report today. I actually have that here, the newest one that was just released today, effective of this past Tuesday. Managed money speculators have a long position of 270,000 futures contracts corn, a long position of 194,000 future contracts bean, and 15,000 future contract long position for wheat. So they're still long all three commodities, even with the board being down 13 on corn this week, down 28 on beans, and down 27 cents on wheat. They sold off some, but they still have a very large long position. So keep your eye on that going into next week as well. We did see also this week that Russia announced they would increase their export sales of wheat. That came at the same time that the majority of the hard red winter wheat country, parts of Texas, Oklahoma, parts of Kansas, no rain in West Kansas, and parts of Nebraska received snow and rain this week. So that also put negative pressure on your soft wheat futures contract in Chicago. So one more thing mentioned going out, we saw some remarks yesterday talking about outside influences. We saw some remarks yesterday from Mr. Biden about adding to the current stimulus package that Congress is talking about now after he is inaugurated. We saw the Dow futures go back up and trade above the 30,000 mark, and we know that mark is mostly something we keep in our mind, psychological, but it's important. We traded above 30,000 today. These equity markets love government stimulus, as we know. We also see the dollar continuing to drift down, the dollar futures index, and we're right near a 3-year low. So we're going to be watching that next week as well. This is Robert at Virginia Farm Bureau's Grain Division.